Okay, good morning everybody. You are very welcome to this morning's webinar. First of all, I would just like to do a quick sound check. So on the right hand side of your control panel, you'll have a little question bar. So if you can type in a yes or a Y, just so I can know that you can hear me. And hopefully I should see a good few yeses coming through. Okay, brilliant, brilliant. Okay, so good morning everybody. You're very welcome to this morning's Auto Enrolment webinar that's hosted by BrightPay. My name is Karen Bennett. I'm the Marketing Manager here at BrightPay, and I've organised these webinars that we're running over February and March. The webinars are specifically designed for accountants, payroll bureaus and bookkeepers that have payroll clients. Today's webinar will aim to make it easier for you to help your clients with their auto enrolment obligations and highlight methods to streamline the auto enrolment process. Our first speaker today is Paul Byrne, and Paul will present auto enrolment, a new revenue stream for bureaus. Paul is the Managing Director here at BrightPay. He is also a chartered accountant, having worked in practice for over 20 years. Today, Paul will share his unique insight into what auto enrolment means for accountants and other payroll bureaus, along with his thoughts on how to capitalize on this new business opportunity. I'm delighted to welcome our second speaker today, which is Martin Bissett, and Martin is the founder of Upward Spiral Partnership. Martin provides professional selling skills and leadership development for accounting partners and senior managers in the accounting profession. He has worked with hundreds of accounting firms to both increase revenue and drive profit. Martin works with his accounting clients over a number of disciplines, including business development, training, consulting, mentoring, and research content. So on behalf of BrightPay, I'd very much like to welcome Martin to this morning's webinar. Martin will present Building a Pipeline to Winning New Clients with Auto Enrolment. Now, throughout the webinar, you will have the opportunity to ask any questions. Again, on the little question bar on your control panel there's a question bar, so you can ask any questions that you have, and at the very end we'll have a 5 or 10 minute Q&A session, and each of the speakers will answer as many questions as we can get through. Also, the good news this morning, we are running a free competition, and the competition is for a BrightPay Bureau 1516 license. And we have not one but 2 licenses to give away today. And the competition is open to all attendees who stay for the duration of the entire webinar. I'd now like to pass you over to Paul, and Paul is going to present Auto Enrolment, a new revenue stream for bureaus. So take it away, Paul.
Hi everyone, and thanks for joining us today. Just a small bit about myself to start off. My background is as a practicing accountant. I started my own practice back in the 80s and eventually grew to a 3-partner practice with 10 staff before doing something completely different and moving into software development full time. While in practice, I provided payroll bureau services for about 30 clients, so I know what it is like in the front line. And this was definitely my motivation in getting into payroll software development, to make better software than what I was using at the time. Although I can't claim full credit for BrightPay, which is written by someone younger and better than I, my fellow director, Ross Webster. But Ross and I together ensure that it has or it will have everything you guys need. So here is the agenda for my slot today, which I hope you will find informative, and hopefully it will give you plenty of food for thought. When talking, I will refer to auto enrolment or automatic enrolment simply as AE. Okay, a quick recap on what AE means, and just to note that this is only a summary. AE is a vast subject, and some areas are highly complex. It would take days, even weeks, to cover the subject properly. At the end of the day, you do not need to have an in-depth knowledge of AE. It is up to your pension provider and your payroll software provider to filter out all the noise for you. So, in short, AE is a government initiative to help more people save for later life through a pension scheme at work. AE is being rolled out in stages across all employers and started with the larger employers in October 2012. By October 2018, all employers will be required to offer workplace pension schemes to eligible workers. Now you'll see from the slide that January 2016 is when small and micro employers start to stage. This is the start of the so-called tsunami, and things will definitely get very interesting from there on. A lot of the companies staging before now will probably have had their own HR people to help them through the enrollment process. The vast majority of those staging from January 2016 will have no in-house expertise and will more than likely turn to you for help. So you have a gift-wrapped business opportunity, and this is business you don't have to go chasing. What AE actually means for an employer is that from their staging date or from their deferred date, if they're using postponement, all eligible job holders must be automatically enrolled. Eligible job holders are those that are between the ages of 22 and state pension age, earn more than £10,000 per annum, work or ordinarily work in the UK. So eligible job holders can opt out after being enrolled. All other employees are either non-eligible job holders or entitled workers, and they can choose to join the workplace pension scheme. So in summary, AE is something that is optional for the employee but mandatory for the employer. With AE comes a number of employer responsibilities. Employers must set up a pension scheme with a qualifying pension provider. Next, employers must assess their workforce at the staging date and enroll all eligible job holders or use postponement. Employers must also pass on the necessary communications to all employees, not just those who are automatically enrolled. Within 5 months after the staging date, employers must complete a declaration of compliance to notify the Pensions Regulator that they have complied with AE. There are also a number of ongoing employer responsibilities, such as handling opt-outs and opt-ins, making deductions and contributions, monitoring employees each pay period, and sending a contribution file to the pension provider. To date, just 43,000 employers have staged. Throughout 2015, 45,000 employers will stage, and in January 2016 alone, over 100,000 firms will stage in just 1 month, the start of the so-called tsunami. The Pensions Regulator has conducted some interesting research. 78% of small businesses will look to their bookkeeper, accountant, or payroll bureau provider for advice. Yet only 67% of accountants say they know a lot about AE, which is a shocking statistic considering the high level of dependency on accountants. And just 1 in 4 accountants are aware that you can look up a client's staging date on the Pension Regulator's website. So, employers who have staged so far are mostly large firms, most of whom will have had an existing workplace pension, a payroll or HR department, and probably in-house financial advisors. Most of the 1.25 million employers still to stage, and for the 250,000 new employers each year, this will be their first time to review any kind of pension scheme for their employees. Some more interesting research from the Pensions Regulator again. Advisors say that 50% of employers who have already enrolled have turned to them very close to their staging date. 3 out of 10 payroll administrators feel their clients will rely on them completely to help them through the process, while only 39% of payroll administrators feel their clients will be able to deal with any additional demands involved in implementing AE, with 8 in 10 believing that their clients will wait until the last minute to seek advice. So, down to the nitty-gritty. How will AE result in a new revenue stream for you? A discussion I had with an accountant customer recently summed it up quite nicely. He was charging his 50-employee client £400 for handling their staging and had upped his payroll fees from £1 per payslip to £1.50 per payslip to cover the ongoing AE duties. Staging took him less than an hour. There were no additional software costs, and the ongoing duties were minimal in terms of his time. And most importantly, the client was delighted. Accountants and payroll bureaus have had a lot to deal with in recent years. Things have cost them in time, money, training, and new systems, and which they could not readily recharge to their clients. Examples are RTI, IXBRL, FRS 102. AE is the one new change that you can charge for, and that should not cost you anything. So, 3 key points are evident from the previous slides. Employers will need help from accountants and payroll bureaus. Employers will come to you last minute for assistance, and employers will prefer to consolidate all their outsourced services to the one provider. So, key questions you need to ask yourself. Are you prepared to offer AE services to clients? Are you willing to lose clients if you do not offer AE services? And this is a real possibility, because if you decide that you don't want to get involved in AE, your clients may seek another advisor who will obviously try to convince your clients to use them for everything else. And finally, will you make a profit from auto enrollment? And I believe the answer to this is yes. With a high level of employers set to enroll in the coming year, there is huge potential for accountants, bookkeepers, and payroll bureaus to gain new clients and to increase fees from existing clients. The bureaus have a relatively short window of opportunity to position themselves as open for business in this ever-increasing cluttered space. You need to establish yourself as proactive rather than a reactive AE advisor. Bureaus will naturally increase their income by providing this service in exchange for an initial setup fee to cover staging, plus a monthly retainer to manage the ongoing AE duties, or alternatively an increased price per payslip. Payroll software is the logical fit for processing AE. Payroll will already hold details of age and earnings, and these are the 2 main elements in determining what AE actions are required at any stage. Payroll software can therefore readily handle AE, much like it took up the challenge of RTI. In fact, AE slots neatly alongside RTI as just one more tick box to check each pay period. It is estimated that there are more than 30 administrative tasks to perform in relation to AE. Software solutions can automate the employer responsibilities, which reduce the time spent on these tasks. With a combined payroll and AE solution in place, bureaus will benefit from greater efficiency, increased value added, and improved cost savings. The payroll software that can automate employer admin tasks such as employee assessment, personalized communications, ongoing monitoring, handling opt-outs, refunds, mandatory reporting, and pension contribution deductions will be vital. So, if AE is not already included with your current payroll software standard, you may have to pay additional costs for AE functionality and support. So, whatever payroll software solution you choose, if you are changing payroll software, it is advisable to make the change from the start of the payroll year, whereby you can avoid complications of a mid-year change, such as importing cumulatives and ensuring that RTI files and such like are correct. So I'm going to take 30 seconds here for the shameless plug. BrightPay is an easy-to-use payroll and AE solution that can do everything you need to provide a profitable AE service to your clients. With BrightPay's Bureau package, you can benefit from unlimited employers, unlimited employees, and free phone and email support for only £199 plus VAT per annum. That's the end of the plug. So the key takeaways. Be ready. Know what you need to know when asked by your clients. With this very thing in mind, I recently published a paper on Accounting Web with this respectful title, Automatic Enrolment for Dummies. It's a 10-minute read, and we'll send you a copy of the PowerPoint after the webinar, and this will have a link to the article. Payroll software, make sure you have the correct software and systems in place to prepare your clients easily for auto enrollment. And be aware that some payroll software packages only partially handle AE. Be aware of hidden costs. When researching AE solutions, you need to think about any limitations when it comes to the number of employees and employers. And customer support, confirm that support costs are included or inexpensive with your chosen solution. And finally, be proactive and inform your clients that you are open for auto enrollment business. I would now like to hand you over to Vicky for a 3-minute talk showing you just how easy auto enrollment is. Vicky is our BrightPay support manager, and in this example we are assuming that the employer, or you on their behalf, has already registered with a pension provider, in this case Nest. Registering with Nest should take only 30 minutes on average to complete. Before passing over to Vicky, my somewhat controversial opinion in the matter of AE providers is that most small employers will choose Nest because it is a government-backed scheme. It has a mandate to accept all employers and employees, even the unprofitable ones, the small ones, and it has been preparing for the tsunami for the last few years. Having said that, BrightPay will also accommodate People's Pension, Now Pensions, Scottish Widows, all of which are great schemes, and this list is constantly being added to. As a bureau provider, for the sake of simplicity, you will naturally prefer all your clients use the same provider. So, thank you, Vicky.
Okay. Thanks, Paul. So as Paul just mentioned, we will take a quick look at a company who are using Nest as their pension provider. We'll also assume in this example that the employer has received their staging date and that they are due to stage on the 1st of May 2014. So as soon as the staging date, as soon as you have your staging date, this can be entered in BrightPay under the employer section and entered in the designated field provided. Setting up your pension scheme in BrightPay is also straightforward and can be done in advance of your staging date. Simply click on Pension Schemes, followed by New, and in this example you would select Nest from the listing. So where prompted, you would enter your employer reference here, and then on the following screen, simply enter your group details, exactly how you have been set up with your pension provider. So once you have reached your staging date within the payroll, BrightPay will then automatically assess each employee's eligibility for you and will determine whether they are eligible, non-eligible or entitled workers. You will now see the on-screen alerts appear, and simply clicking on Go will bring you through to the options available for an employee based on their work status. So you'll see on screen here we have Jemima Neary, and she is an eligible job holder. So the options we have available for her are to enroll her, to postpone her, or to mark as exempt. So in this example, we will enroll Jemima. So simply click on Enroll, and you select the pension scheme you wish to enroll her in from your listing. So once enrolled, BrightPay will then automatically produce the communications letters that you are required to give to the employee. On the next screen here, you will see an extract of Jemima's enrollment letter, and this will include information on her staging date, her contribution rates, her options for opting out, and general information on auto-enrollment and what it will mean to her. So once enrolled, you will see now that the pension deductions will be applied to the employee's payslip. And once the pay period is finalized, the employee's payslip will also include details of the pension contributions being made by the employee and, if applicable, the employer. Finally, once the pay period is finalized, and this will be done going forward, a contributions file can be prepared within BrightPay and uploaded into Nest web portal. And this contributions file will include details of the employees enrolled, the contributions they are making, and also any contributions that the employer is making too. So that concludes the short demo. If anybody would like a more in-depth demo, then please do contact us and we can arrange that with you. I will now pass you back to Paul, who will talk about the future development of BrightPay.
Thanks very much, Vicky. Yeah, just to say that our R&D department is in full swing, and during 15-16 we hope to roll out an optional feature, which for the time being we are calling the Accountant's Portal. And basically this will be a web page branded with your logo, controlled by you, where your clients can submit payroll information, hours, etc., for easy import into BrightPay. This will cut down on transposition errors, speed of processing, and probably make you look quite good with your clients. There are many other things that we are planning as R&D and innovation are key to us. Unfortunately, I don't have time to go through this list in today's webinar. So with that said, I'm going to hopefully pass you over to Martin.
Good morning, everyone. Can everyone hear me okay? Okay, that's fantastic. Well, first of all, everyone, good morning. Thank you very much indeed to BrightPay for allowing me to be a part of the webinar this morning. And I have no idea what you're thinking because I'm not that good, but what I'm thinking is if we know the opportunity and if we know how the software, the operational side of it would work, the one thing we don't know is, right, we haven't got any money in our bank account. All the opportunity is outside, it's not here with us. So how do we take what Paul and Vicky kind of just outlined for us and actually turn that into money in our bank account? And basically, that doesn't happen unless we control the process. Because if we don't control the process, then what will occur is that we will get business as and when. We will hopefully be referred by someone. We'll hopefully have someone notice us in our advertising. We'll hopefully get an opportunity. But in Paul's remarks, he mentioned that this is a gift-wrapped business opportunity. And I know through not only working with accountants from around the world, but from also having my offices right next door to an IFA's, that some professionals don't like having things gift-wrapped for them, or if they do, they don't open them, because these opportunities still remain out there. So what I want to show you now, if it's okay, is to take control of the new business growth via this gift-wrapped business opportunity that Paul mentioned. And we do that by building a pipeline. Now I know if you're anything like me, you tend to listen to webinars rather than watch them and go on and do something else and multitask. Well, I can't multitask. And most of what you need from this session is on the screen. So I encourage you to watch if you're not already. The pipeline, some firms, payroll bureaus, organizations, see as being a list of prospects, maybe a list of clients that they could contact, or one or two people that they might have met at a networking opportunity, or whatever it may be. But a actively managed pipeline is a lot more scientific than that and a lot more controlled, and ultimately directs your chargeable time as to where the best and most lucrative or likely opportunities exist. So let's go and build one together. If you have a list of prospects, that's great as to who you could bring your auto enrollment services to. If you don't have a list of prospects, then let's get one. But whatever you've got, hopefully we're going to build it to look like this. Now, coming up on screen in just a second. So we're going to, in the next few minutes, fill in all of these sections. So you have what hopefully is an engine room for where your new business is coming from. In other words, you're going to be able to forecast accurately. Here's how we go about this. To build a pipeline, there has to be a flow of water into a pipeline, or flow of energy, or flow of gas, or whatever it is that you are putting down your pipeline. So we need to build channels to feed the pipeline, and there are 7 channels that we can build to get our auto enrollment services out to the marketplace. The first thing we need to do is to take a look at all the possible opportunities that there are. I'm going to start with opportunities who have come and gone in the past. So whether you're listening to this as part of a wider accounting firm or whether your organization is payroll only, hopefully you will be able to see that there are a number of prospects, proposals, conversations, meetings in the last 5 years that didn't go any further, that maybe didn't choose to use you for whatever reason, or stayed where they were, or went somewhere else, or whatever it may be. I want you to think, please, about those last 5 years of opportunities. Anything that comes to mind, not obviously a comprehensive compendium of the entire set of them, but just anything that are coming to mind now as I'm asking you to think about this. I then ask you to look at the value of them. So maybe you were quoting £500 for one and £1,500 for another and £2,500 for another and so on. Just have a quick look. As you think of these things in your mind, just add up, roughly speaking, what they might have been worth and what difference winning them would have made to your new business growth goals for 2015. Then I'd ask you to ask yourself, how many of these prospects found what they were looking for? And the most likely answer is, I don't know. As soon as they went away, I stopped talking to them. Therefore, not only do we not know if they found what they were looking for and got the help and support that they needed, which you can provide, but also we don't know if they're still happy. If they did find something that met their needs, are they still happy with the software? Are they still happy with the service? Are they still happy with the individual? Are they still happy with the price? And so on and so on and so on and so on. So when you look at those, these are our first contacts. What I'd like you to do, if you have something to hand, a pen and paper, a tablet or mobile device, just jot down, if you would, or type in one or two prospects' names. That's all we really need, just one or two, to give you a flavor of these style opportunities. Once you've got those down, we're going to move on to stage 2. Now those are lost opportunities, ones that have come and gone already, that were interested enough to talk to you but did not buy from you. Now we're going to look at referral sources. This is a second channel that we can build to identify potential new work. So I'd like you to think about your current sources of referral work or centers of influence, people who are influential in your business community. I'd like you to ask yourself, once you've identified those, what have they referred to you recently? Do they owe you one? Do they owe you 17? Can we now make contact and say, hey, we're rolling out Auto Enrolment and we're aware that a number of companies are well past the staging date and have a degree of urgency but don't know where to turn. Could you open some doors for us? Let's have a look at what they've referred. Are they a strong referrer? Are they a poor referrer? Has it been a long time since they referred? Let's take a look at this. And again, we're just looking for one or two. In this exercise today, just one or two that may come to mind. We don't need a comprehensive list. Then, once you've identified those, I'd like you to identify referral sources that you do not have a relationship with, that you should have a relationship with. Who are the best introducers in your town or city? Who's at the bank that you don't have a relationship with? Who's at the law firm? Who's at the accounting firm that doesn't have a payroll bureau of their own? And identify the people that you should have a relationship with. Because these people cannot open one door, they can open multiple doors, and therefore you're going to save a tremendous amount of chargeable time by being able to hit multiple opportunities in one go. You've now got your next set of potential opportunities identified. So let's say that you can only think up one or two lost opportunities that might be £500 to £1,500 each, and let's say that you can only think of one or two referral sources or potential referral sources, but whom could each identify for you one new opportunity, i.e. another £500 or £1,500 worth of opportunity each. Maybe now, on your little list that you're scribbling down, if you're doing what I ask you to, you'll have 4 opportunities, maybe worth £1,000 apiece. Let's keep going. Let's build the third channel. The third channel is current clients. Now, depending on what kind of organization you are, you may have clients who don't use you for a payroll service. You may be part of a larger firm. I know we have some of those on the call today. If that is the case, then let's take a look at the clients that we've probably got. Grade A's, Grade B's, and Grade C's. Now, Grade D's I really wouldn't touch. If you don't grade your clients, don't worry, I'll show you how to do that in a minute. I would hope that for Grade A clients, you're as close to them as you can possibly be at this time, and you've already approached them, or they've already approached you, and that's dealt with. And therefore, it's the Grade B and Grade C clients where the opportunities probably lie within your existing client base. And if they're a B or a C, then typically they will know what they buy from you. So if I was to ask them, hey, what does your firm do? They would say, well, if you're an accounting firm, they'd say, well, we do audits or tax or accounts. And the practice does other things, but I really have no idea what they are. That's the most commonly found current client perception, and therefore they do not know that you can help them with auto enrolment. It should be obvious to them, but they've got other things to think about, like cash collection. So the next thing we need to do is to reach out to them and change that perception so that they know all the things that you do, including payroll support. And once they know that you do that, we now have a reason to have a conversation with them about their provisions and what they put in place to be able to handle auto enrolment smoothly. However, what we want to do, and I think this is where BrightPay comes in very strongly, is we want to turn them into having the ultimate client perception. In other words, rather than saying what their firm does, if I was to ask them, in terms of the services that they provide, they talk to me in terms of the outcomes that they provide. So in other words, you might say, you know, an ideal client perception for you is being able to talk to one of your clients and say, how are we doing? They say, well, you're fantastic, you sorted this out for us. Not you provide some payroll services or that you sorted out our auto enrollment, but you took a headache away from my list of headaches that I've got in running this business. Once they think and feel about you in those terms, they are then also a referral source. So not only do we have a client opportunity for themselves for auto enrollment, we have a referral opportunity beyond that. So there really is a treasure trove in the current client side of things. So I would ask you to pick maybe one current client that you could approach just for your list. Then we'll go to stage 4, this fourth channel. This fourth channel is ex-clients. Now here, I'm not talking about the ex-clients that you held a champagne party in the office for when they left, but rather the ones you were sorry to see go, or the ones, if you're being honest, you made a mistake on, and they left because of that mistake. But we don't know that they found something better wherever they went to. And many, many ex-clients would welcome the chance to return to a familiar surroundings and working with you again, but they are too embarrassed or proud or unsure of making the first step. So we don't make them do that, we'll go out to them. So with ex-clients, I'd like you to look at all directors or all partners, client list for the last 5 years, anybody that we've lost, that we shouldn't have lost, that we're sorry to lose, that we could potentially win back, and look and now have a reason to go and talk to them. Hiya, it's been a while, sorry I haven't been in touch, I hope everything's going well in the business. I'm just giving you a call today, or an email, or whatever form of communication you're comfortable with, to find out, because a lot of our clients, you know, are now just waking up to the auto enrollment work that they need to carry out, and we wondered whether you had provisions in place. So in building this pipeline, I'd now like you to jot down 1 or 2, if you have them, ex-clients that you would want back if the opportunity presented itself to you. And that's our fourth channel. So hopefully now your pipeline, or your little list, before we turn it into a pipeline, is now maybe having 4 or 5 or 6 different opportunities that may be £1,000 a piece. So maybe we're seeing around about £6,000 of opportunity now. Maybe we're doing something better. I don't know. Let's go to stage 5. The 5th channel we can build to feed the pipeline is ex-inquiries. These are the phone messages you never returned, or you did return and couldn't get hold of, or the people who said they'd like to meet with you but they could never find a date to do it, or those who came in via the website and when we returned the email we didn't hear from them again, or whatever it may be. But at some point they were interested enough to get in touch with you in the first place, suggesting there was a need. The question is there still a need? Has it been dealt with, or have they failed to find a solution? That's our next channel to go down, the ex-inquiries route. Now I'm hoping your organization logged those when they happened. If they didn't, this might be a tough channel to go in. But maybe if you happen to be very close to your business development efforts, if you happen to be a one or two person organization, maybe you know off the top of your head who these individuals or organizations are. List them, capture them if you can. And whilst you're doing that, we'll run on to stage 6. Stage 6 is then the dreamy one. The wish list, or the highly desirable, or the golden 50, the people you'd love to act for, the people who might have a huge auto-enrollment need, the people who could be very lucrative for you, the people whom you could take a tremendous headache away from and act as a paracetamol for. Okay? Just want you to take a second. Hopefully you're watching the screen. Hopefully you're enjoying this. Take a look. Is there somebody in that category that you can jot down? And one firm once said, yeah, mother care. Well, no, perhaps not. So something more realistic, probably a large employer in your area, probably someone with a great reputation, probably somebody who pays the bills, whatever it may be. Pick someone that you like and capture them on your prospect list. And then stage 7, if you really don't have anything in the other channels, and I'll be asking you why you don't have anything in the other channels, but let's say you don't, then proactive marketing, whether it be by direct mail or email shots or telemarketing or whatever channel you choose to employ, or whatever mix of channels you choose to employ, this is another option, because there are plenty of organizations who have not heard from their payroll bureau or their accounting firm about auto-enrollment. They don't know what it is, and you may be the first person to knock on the door. As unbelievable as that sounds, it is true. I see it literally every day. Literally every day. So you may look at proactive marketing. You may have proactive marketing in place already, and you might wish to start tweaking your marketing campaign to start giving out this message. Or if you've given out this message already, you may wish to re-emphasize. But if you've got any prospects in play currently that you're talking to from proactive marketing, let's get those on the list. Now, it's going to be a quick second to try and compile that list whilst we move on to something else. I mentioned a little while ago about grading prospects. I'm a simple person. I don't go for complex grading. If you want to grade and you don't know how to grade, then Martin Bissett's stupidly simple scheme will now sort this out for you. Here is how I grade. Use this as inspiration or copy it wholesale, I don't mind. For me, a grade A client or potential client is one who is the right size of organization for me, not too small, not too big, have got the right type of people in the organization, the sort of people that I enjoy working with, that have got the right type of engagement for me, the right sort of work that is within my specialisms, not that is out of my depth or that I know nothing about, the right level of fees, so we're not quibbling over a couple of £100, and the right geography. Now, as time goes on, geography and because of online technology, geography is less important for me personally, but it might be important for you. So there they are, 5 simple steps to say if the potential client or my opportunity that I'm trying to pursue to sell, or rather to attract people to use my auto-enrollment services, have got those 5 components about them, they are a grade A. Then quite simply, beyond that, if they are missing any one of those 5, they become a grade B. So in other words, a grade B might just have 4 of the 5 component parts that you just saw on screen. A grade C has 3, a grade D has 2, and so on we go. And a grade E we don't even want to talk about. So quite simply now, I'd ask you to look at that list that you've identified, or if you've identified them in your head, just assign them a grading. Are they a grade A opportunity for you? Have they passed the staging date? Do they need to do something now? Can we turn that around in 48 hours for them? Are they, do they have an urgency to buy from us on that basis? Are they grade B? Are they a good opportunity that need a little bit of relationship building first? Are they a grade C? Really need warming up, but there's potential there. What type of opportunities have you got? And once we've got that, we can build a pipeline. Now, shameless plugs, unfortunately, it's the name of the game. A lot of clients I work with have said, we really need something that that is a low-cost way of releasing us from the ebb and flow of winning new business. So just to let you know that from April, there is a new Winning Clients Implementer Club. This is an online solution which is 90 minutes each month plus video content, checklists, and a whole sort of proactive winning work pack. It's something that we're just in the process of launching right now. So this is simply an advertisement that it exists. If a process of working on these prospects to turn them into new fees is something that you would like to take control of in your firm, then simply drop me a line to martin@upwardspiralpartnership.co.uk that simply says, tell me more. I, in return, will pick up the phone and we'll have a chat and we'll see where it goes. Okay, let's get this pipeline built. Here it is. So I've created a fictional example. At this point, hopefully your pipeline could be filled in this far. Ignore the central columns, we'll deal with those in just a second. So we have an organization under name, a grade, we have the service, Auto Enrolment, we have the value, and I've gone with 2.5 here. We've got a decision that can be made in April, in other words, we could win the business in April if we were quick. And what have we got to do now? We've got to write a proposal for this prospect. Hopefully, you will be able to answer those questions and know those things about the prospects you've identified so far in this webinar. If you have, great. Let's get those just noted down. Don't forget this seminar recording webinar recording is available, and therefore you'll be able to review this information. But I'd like you to keep watching because you need to understand how to do this central column that comes next. You'll see this accounts and TV. What on earth? I'll show you. With any potential piece of new work, we need to get the accounts. The accounts is an 8-letter mnemonic which represents a qualification process for how likely the prospect is to buy from us. Here's how it works. The A stands for answer, which means do we have the answer to their problems? In the pipeline, if it's a yes, we score it as a 10. If it's a no, we score it as a 0 and go no further. If we don't have the answer for their problems, what do we have? Score it as a 0 and get rid of it. If we've got the answer, you score it a 10. Can they afford us? The C stands for cash. If they can, we score it a 10. If they can't, we score it a 0. It's only 10s or 0s. The second C is convince. Is there anybody else we've got to convince to use us for their payroll solutions or for their AE solutions? If there is, then it's a 0. But if we've got everyone that we need to convince already in front of us, it's a 10. Are there objections? Can we see them having a problem with something, such as coming away from who they currently use? If there are no objections, it's a 10. Is it the kind of work we want to undertake? Well, hopefully this will be 10 every single time for you. If it is, score it a 10. Do they need to do something? Now this is a beautiful one for our auto enrollment, because if they're past their staging date, there's absolutely a necessity for them to do something right now. So therefore, score that a 10. They need to do something. Do we have the timing of the next meeting in place? That's normally where every pipeline will score a 0. If you happen to have a next meeting set up to discuss auto enrollment, fantastic. Score yourself a 10. And then the S, the S of account stands for signatory, with 2 question marks. Do we have the person who can sign off and authorize in front of us? If we do, score it a 10. If we don't, score it a 0. And so what happens as a result of this is we have a pipeline now looking something like this. And the reason for using those 10s and 0s was to give us a percentage opportunity and a probability score. So we've got a 60% chance. This can only ever add up to 80 because we know that there's no such thing as a 100% chance of winning something. So we have scored ourselves out of 80, the maximum chance we've got of winning something, and this shows we've got a 60% chance. When we've got multiple prospects, we go with the highest percentage probabilities. And as technical professionals, hopefully that will make sense. So your pipeline ends up looking something like this, which is that we have the company, the grade, the service, the value, our score, and you'll see on this score, our concerns are that it may not be able to afford us. The first C is a 0 on cash, and we don't have the timing of the meeting. The T is a 0 on timing. Therefore, it's a 60% chance of a £2,500 opportunity. Therefore, our probability is £1,500, and we forecast on the probability. TV stands for true value. Now, if you're still with me after all of this, then here's where it goes next. Generally what happens is when you build a pipeline like that, you really work hard, because it's proactive work now rather than reactive work, and you really, really work hard to get some business out of it. And the thing that drops is the lowest value, least desirable client of the entire list. That's the one that ends up coming on board. So you pump all this effort into a pipeline, you turn on the tap, and that's what comes out, a tiny little drip. Now, for most technical professionals who aren't used to attracting new work proactively, that can be very discouraging. And when that happens and they see all this great opportunity which they haven't closed, and this one tiny little tiddler that they have, they say, oh, you know what, forget it. It was easier when businesses walked in the door. Well, it's always easier when business walks in the door, but unfortunately we've got to attract it first. So if you want to take control of how you maximize the opportunities and how the optimum AE opportunities are realized in your firm, then they have to be taken control of in the way in which I've shown and the way in which no doubt we've gone through too quickly and you'll see on the replay. So they tend to say, forget it, too much effort. However, what I would say to you is this. When you build a pipeline, it's tough. But once you have, and you carry on building it, and you start monitoring it and managing it, you start to see where your chargeable time can be used the most effectively. And a pipeline becomes the most powerful engine for driving your firm forward, bar none. Bar none. And that's why it's so important. So once you've built a strong pipeline and you get into the habit of managing it and you get the confidence from seeing new wins, what happens then is that the new business starts coming through at the level to which you're comfortable in handling it. Obviously, the greater the level of opportunities and the greater the probability of winning those opportunities, the greater the likelihood of seeing a return on investment. But hopefully in this short session, we've just identified maybe £6,000 to £10,000 worth of new opportunity right away that you now need to get to work on. If you do need to get to work on that, or if you need to build a pipeline from scratch, then I would suggest having a look at the kind of things we'll cover in the Mentor Club that I highlighted earlier on. And these are the processes generally to winning the Auto Enrolment opportunity. Getting the opportunities, getting in front of them, creating the proposal, getting the next meeting, handling their objections and resolving concerns, and winning the work and getting paid for the work. So, thank you very much for taking the time to see how we build the pipeline together. With regard to the Implementer Club that I mentioned earlier on, you'll remember from seeing on TV, in all best infomercials, they say, but wait, if you buy today, you can have a free set of bread knives. Well, I'm not offering bread knives, but there is an opportunity. That at this level, and it's a pay-as-you-go situation, you're not tied in, then there is a 25% off the BrightPay software as a result of this, which is a tremendous gesture from BrightPay, and this club is run in association with BrightPay. The next enrollment is in April, and you might be saying, Martin, I haven't got till April. Very good, but I don't have till April. I need assistance now. Not a problem. Whatever the level of interest is, just drop me a line to say,
hello, everybody. I don't know. Martin seems to have just gone off there, so we'll just take back the control for a second. Yeah, we are. Apologies about that, the joys of technology. So I think Martin was close enough to finishing up there. So just to finish up, we have a couple of useful links and resources that also will be included on our PowerPoint that we'll send to everybody. The there was a few questions there for Martin, but we'll just take a few questions that have come in for Paul. So Emily asks Paul, are you allowed email communications or does it have to be letters?
Yeah, no, electronic communications are allowed for the Auto Enrolment communications to employees.
Okay, great. Another one from Mark. How long do you think it would take to prepare a client for auto enrollment?
Okay, well, it probably depends on the size and complexity of the client. But probably going back to the one a customer was telling me about, his 15-employee client, it took approximately 30 minutes to register with the auto enrollment provider, in that particular case, Nest. Another 10 minutes, say, to enter the information from that registration into BrightPay, and then when the actual staging happens, probably an extra hour to actually hand out communications or email communications in that particular case. But there was really no time involved in the actual payroll itself, because obviously the payroll processes all the calculations automatically. So it's not that much. I think it's straightforward.
Okay, great. So Martin is still offline there. So we have another one for yourself, Paul, from Oliver. I currently use Sage. How easy is it to export mid-year figures and import it into BrightPay?
Well, we do have that facility. Sage can actually produce an export CSV file, which we can then import. We can also do that mid-year if required. Sometimes it's, as I say, it's advisable sometimes to do it from the start of a tax year because there's a lot less opportunity for problems, particularly with RTI and estimates and stuff like that. So, yeah, we can do it, and it's automated as well. Plus, we produced a video on our website showing how to actually do that particular task.
Okay, great. I think we have time for one or two more questions. So this is from Claire. Does BrightPay have CIS functionality?
BrightPay itself doesn't do CIS, but what we're doing from the start of 15-16 is our other products, which is called CIS Assistant, which does CIS. We'll be providing that free of charge, basically, to BrightPay customers.
Okay. And there's one question there. Can BrightPay be installed on a network?
BrightPay works very much like Word or Excel program, in that the employer file is like the Word document or the Excel document. So you can save that file to a network drive, which is obviously can be accessed by other people in the office, by other desktops. But it is something that's installed to a desktop, and say the file can be saved or opened from wherever you need.
Okay, great. Okay, so we have a question from Haley. Who decides which pension provider to use?
Okay, well, ultimately it's the employer who must make that decision. That's it in a nutshell, really.
Okay, great. That was a quick one there. Okay, guys, just having a quick look here at the questions.
I must say there's a good few questions coming in here, and what we'll try and do is at least get back to you individually with the answers. Even if we don't do it during this particular session, we'll email the answer to you or however.
Okay, great. So as I said, there's a good few questions there also for Martin. We can't possibly now get to. There's a lot of questions coming through. So as Paul just mentioned, we'll get back to you in relation to the questions, and we'll send out, I suppose, a group email to everybody because I'm sure there'll be a lot of crossover with everybody. But I'd like to thank Paul and I'd like to thank Martin for today's webinar, and I hope you enjoyed it. And also we will send out the winners of our competition when we send out the answers and the PowerPoint presentation to everybody. So thank you very much.
Okay, well, thank you, Karen. Thank you, Vicky. Thank you, everybody, for listening in.
Okay, we're just going to sign off. So thanks a million.
Okay, bye.
Bye.